Hey everyone, it's Shyamanta here. Remember, I am not a SEBI-registered advisor, and this video is for educational purposes only. Welcome to today's episode of 5K Punch, where we break down the top 5 Indian and global stock market news stories you absolutely need to know. From market dips to surprising earnings reports, we'll unpack it all. So, buckle up, grab your notebooks, and let's get started. Alright, first up, let's talk about the Indian stock market. It's been an exciting week for investors. After a solid 7-day rally, the markets took a breather today, showing signs of cooling off. The Nifty slipped below the 24,250 mark, indicating a slight pullback. Corrections are a natural part of any healthy market, often seen after a period of sustained gains. This dip could be a sign of short-term profit booking or a potential shift in investor sentiment. Investors might be locking in gains. Are they getting cautious about the road ahead? Concerns about future market conditions could be influencing their decisions. It's too early to tell, but this is something to keep an eye on. Analysts will be watching closely. Volatility can lead to sector rotation or consolidation, which can create new opportunities for savvy investors. The key takeaway: don't let short-term fluctuations distract you from your long-term investment goals. Stay focused and stay informed. Next up, we're heading east, where things are heating up again between the world's two largest economies. The US and China are once more at odds, and this time the stakes seem higher than ever. Trade tensions, which had cooled down, are back in the spotlight. The financial markets are reacting, and the headlines are filled with uncertainty. New tariffs are being threatened, and the whole situation is creating a lot of uncertainty in the global market. Businesses are on edge, and global trade routes are being scrutinized. Why should India care? A trade war between these giants has ripple effects across the globe. The interconnected nature of today's economy means no country is truly isolated. Indian exporters, especially in textiles, pharmaceuticals, and IT services, could face headwinds. These sectors are crucial for India's economy, and any disruption could have significant consequences. Not to mention the impact on global supply chains, which are already under strain from various factors, and the auto components sector. This industry is particularly vulnerable to shifts in trade policies. Bottom line, this trade spat has the potential to fuel market volatility, so stay vigilant. Investors and businesses alike need to keep a close watch on developments. Now, for a bit of a brighter outlook. Despite the trade war brewing, Wall Street ended the day with gains. Investors are focusing on strong corporate earnings. Several major US companies have reported better than expected earnings, boosting investor confidence. This positive sentiment could spill over into the Indian markets, attracting foreign institutional investors. For now, let's enjoy a bit of good news from the world of finance. From global giants, let's zoom in on the Indian market, specifically the FMCG sector. Hindustan Unilever reported its quarterly earnings today and missed profit estimates. The main culprit? Weaker than expected consumer demand, especially in urban areas. Rising inflation, higher interest rates, and economic uncertainty are impacting consumer spending habits. Hindustan Unilever's performance could be a bellwether for other companies in the sector. Keep a close eye on this sector, folks. It's telling us a lot about the state of the Indian consumer. Last but certainly not least, let's talk about crude oil, a crucial commodity that affects economies worldwide. Oil prices have been fluctuating wildly due to geopolitical tensions, production cuts by OPEC+, and varying global demand. India imports a significant portion of its crude oil needs, and higher oil prices mean a bigger import bill, straining the economy. This can put downward pressure on the Indian rupee, fuel inflation, and impact your purchasing power, making everyday goods more expensive. Higher crude oil prices also impact sectors like oil marketing companies, logistics, and FMCGs, leading to increased costs for businesses. Keep an eye on the price of crude, folks, because it can directly impact your portfolio here in India, influencing stock market trends. And there you have it, folks, your daily dose of market mayhem. neatly packaged in our 5-car punch. We covered everything from the Indian market's pause to US-China trade tensions, Wall Street's resilience, Hindustan Unilever's earnings miss, and volatile crude oil prices. The more informed you are, the better equipped you'll be to navigate the ups and downs of the market. Stay informed and stay safe.